It's the beginning of a new month, and that means it is time for your piping hot monthly Bitcoin digest. We have got a lot to cover today, from ETF updates to very interesting dynamics on the regulatory front, Bitcoin adoption news, and more. Let's jump in. This video is made possible by Bitcoin trading cards, and I am pumped to have them as the first sponsor on my channel. I met Aladdin and the team back at Pacific Bitcoin 2022, and I'm not gonna lie, at the time I thought, okay, cool, a quirky little Bitcoin project, but little could I have imagined at the time how this project would capture imaginations. I've personally used these to orange pill people that I care about in my life. The art is stunning and features Bitcoin artists all around the world. You get high quality Bitcoin education on topics like economics and freedom as part of that, which makes this, as you can imagine, a really special project for me. And I'm not gonna lie, it makes you want to collect these. The community behind this is also truly insane, and I think they have a real shot at bringing Bitcoin to the mainstream. So if you're curious to check them out, head over to btc-tc.com, where you can find the different series they've launched. And hey, if you do end up snagging some cards, you'll also get some Bitcoin rewards back on your purchase, powered by Jolts. Here's to ripping packs and stacking sats. Okay, so it's been a little while since I've covered any sort of macro in these monthly digests, and it is largely because we have been in a bit of a holding pattern for some time now. As we can see, we really have established this new higher baseline for inflation. Again, a lot of the statistics I'm going to show you are pretty US centric, but we can see that higher water level. And again, we know the formally published inflation rate is a cooked statistic, but it is still, I think, directionally useful. You have interest payments on the US federal debt that have continued to go up. So notably, the last quarter of last year was when this quarterly number officially passed $1 trillion. That increased even further for Q1 of 2024. So again, quarterly interest payments, that is just simply totally insane. And indeed, the 10-year treasury yield, good measure for the rates of interest that the federal government is paying out, has crept a little bit higher since a local low end of 2023. And on a longer time horizon, you can see what a significant change all of this has been over the last year or so. And so the real punchline, I saw this and thought it was just an excellent capturing and synthesis of the situation. This is from EJ Antony. And as he's saying, the government is basically buying GDP with debt, but is only getting 50 cents on the dollar. So you can see the red bar here is the Q1 2024 increase in federal debt, well over $500 billion, versus the Q1 2024 increase in nominal GDP. This is so important, right? You always see the nominal GDP growth print, and you're led to believe by the mainstream media that everything's well and the economy's hot and the labor market's tight and everyone's doing well. And yet when you look at what's actually happening, this is a very end of the empire data point that has come up time and time before over history and across different geographies globally. If you're growing the debt faster than you're growing your total economic output, the gig will be up. It is only a matter of time. But again, a lot of that is old news, right? Nothing really new there, which is why I haven't really fixated on some of these topics in recent monthly digests. But one thing that I do think is a little bit new is some of the latest strain that is appearing at the consumer and household level. NerdWallet put out this really interesting 2024 State of Consumer Credit Report. And I think the punchline is just how tight some people are getting. There certainly are some in the US who feel better about their ability to manage debt now compared with 12 months ago. But for many, many others, it is not the case. And so, for example, what they found was that 16% of Americans used credit cards for necessities, not discretionary spending, not trips, entertainment, none of that stuff. Credit for necessities because they didn't have the money to pay for these expenses outright. 12% anticipate needing to do this, in the coming 12 months as well, because they won't have the money to cover them outright. You also have well over a third, 37% of Americans that have been charged a late fee in the past 12 months. And Jeff Snyder did a nice video on his YouTube channel recently on this topic. He puts that into historical perspective. And again, while it is the case that, some Americans, particularly, boomers, retired folks, people who are getting that nice interest payment from the U.S. government, they're going on trips, they're going to restaurants. And I think there's a lot of people as well that are just sort of hopeless. They're like, I don't know how I'm going to make ends meet. And so screw it. Why not go out and enjoy a dinner? Hey, screw this system. And so I do think you're finally starting to see some real strain just with the number of people that are using credit or buy now, pay later, whatever, for necessities because they don't have the money to buy those things outright. And so it begs the question, right? What will happen with rates? We've got the next FOMC meeting coming up in a couple weeks in June. Most expect rates to stay unchanged, certainly not lowering because you still have inflation, but at the same time, you're going to increasingly have consumers and households getting into debt problems. The thing is that just takes time. It takes time for all of that to really flow through. So what does this all mean for Bitcoin? I think it's basically unchanged from my prediction to start this year, which was that we will see most of the fireworks probably later in the year in accordance with cycle maximalism, right? Everyone who was like, well, the halving is priced in. It's like, surely it can't be the same thing yet again. And I think the most ironic path is the most likely one, and that would be it. So that would be my hunch. Probably some time yet before Bitcoin really rips and really starts the bull cycle. I think we've had the sort of inning 0, maybe first half of inning 1 with the ETF launch earlier this year, but I don't think we've seen anything yet. On the ETF front, after a little bit of a pause versus some of the early fervor we saw, and by the way, that all of it has been quite correlated to price, so I do think that ETF demand is clearly the main marginal buyer or seller in the market at this time. Inflows have once again picked back up a little bit, and incredibly, we just passed 1 million Bitcoins that are in these ETF products, which is interesting, right? And some have said, well, this is a threat to Bitcoin. We'll talk in just a moment about why Bitcoin's consensus mechanism, at least it's not proof of stake, which would be really bad. But even then, is there a world in which more and more Bitcoin starts to get accumulated in these ETF products? You have Wall Street that starts to fund, Bitcoin core development, push for certain softer hard forks. Again, I think the odds of a lot of this stuff are quite low, but are certainly not zero. And so there are some interesting discussions happening about what is the implication of all of this outside of number go up. But speaking of ETFs, interestingly, we saw none other than the Ethereum ETFs get approved. And again, to be clear, this was the ability for exchanges to list spot Ethereum ETFs. I think the ETFs themselves still need to get approved. But I'm seeing analysts comment that that probably happens as soon as June. And so this was a huge surprise. This was pretty shortly after, you had Michael Saylor saying, oh no, Bitcoin's going to be the only ETF ever, right? Cathie Wood came out and said this was a huge surprise. They would have been asked a ton of questions if this approval, again, for exchanges to carry these products, if that was going to go through the normal process. So clearly her commentary indicates that someone somewhere said, you need to do this and you need to do it now, which is very interesting. Now, side note, and importantly, it does not appear that staking will be allowed for these ETF products. And I think for Ethereum advocates, that's actually a very, very good thing. With a proof of stake consensus mechanism, the absolute last thing you want is for huge pools of institutional capital to acquire that stake and stake it through, one of the main centralized and regulated stake providers. That would call massive questions into the credible neutrality assumption of Ethereum. I did a whole video on proof of work versus proof of stake. And again, that video goes into some of the details. I actually don't think proof of stake is as bad as some would make it out to be. With that said, there are huge, huge risk factors And I think the ETF can potentially play into that. Although for the moment, at least, I think it's a very good thing, at least for Ethereum advocates, that you don't have staking attached to these ETF products. But I don't know, right? If the ETF approvals legitimize Ethereum as a, and as an asset class, but then, you have institutional investors that want that additional yield, and they actually just invest straight up in actual Ethereum and then stake that, like, you could still potentially have that same effect. So, but again, if you're in the Bitcoin camp, don't get too excited either, because there definitely are some concerns around mining centralization. I did a video not too long ago about that, and it is a topic of continued concern. So be sure you're subscribed, because I will definitely be covering some of that in future videos in the near future. But punchline, very, very grateful. Bitcoin is proof of work, right? This is the only mechanism I would want in my globally neutral money, right? What just so happens to be pretty evenly distributed around the world. Energy, that is the main input to proof of work. What is not at all evenly distributed around the world? Capital. That is the input to proof of stake. So anyway, enough of that. And so building on that surprise announcement from the SEC that, again, seemingly came from someone who was like, you need to do it and you need to do it now, there has been a total 180 on the regulatory front in terms of Bitcoin and crypto. You had the US House approve the FIT 21 bill. So this is the Financial Innovation and Technology for the 21st Century Act. And you even had some Democrats voting in favor of that, which is incredible. So this still has to go through the Senate. I mean, it's basically like, hey, let's not like totally fumble the ball and push this entire industry out of the US. You also saw Donald Trump go very pro-Bitcoin. I mean, he said he's going to protect your right to self-custody and use Bitcoin. He is now accepting crypto donations for his campaign. It is interesting to note that David Bailey, I think he's the CEO of BTC Inc., which owns Bitcoin Magazine, all that sort of stuff. David Bailey is Trump's crypto advisor. So I actually think there's a lot more happening behind the scenes than people realize. Trump's vowing to help Ross Ulbricht. I mean, that is crazy. And perhaps what's even crazier is then this happened. So you have President Biden announcing a presidential delegation to the Republic of El Salvador to attend the inauguration of Nayib Bukele. This is a huge change in tone versus all the lecturing that this administration has sent to a nation which it has no control over. Imagine trying to bully a fellow sovereign nation and shame them and then be like, hello, actually, we would like to come and attend your inauguration. Furthermore, the Biden campaign has done a lot of outreach recently in the industry, just suddenly out of nowhere, in a surprising tone shift. So again, as I have long been saying on this channel, I don't think they're going to outright ban any of this. It is way too political. The time for that was a decade ago. And while I really hate the notion of the government anywhere around any of this, I think it is wildly bullish to see this unfolding in real time. This is clear evidence that this is now a serious issue for voters, but that doesn't mean we're out of the woods, right? Bitcoin number go up, I think at this point is pretty inevitable. However, what's not inevitable is the widespread self-sovereign use of Bitcoin, right? They're still coming after privacy tools. I just made a video on all of that recently. See how some of those stories continue to track out. There have been a lot of threats against self-custody. However, we're seeing what a sticking point that is. You already have candidates like Trump talking about it. You already have states like Oklahoma that have passed legislation. And so globally, whether it's in the US or wherever, you're going to have jurisdictions that are more favorable and less favorable. And so the game theory of all of this viral idea continues to spread, but it certainly doesn't mean that we're out of the then they fight you phase just yet. Make no mistake, both sides are pandering for your vote, right? Let's acknowledge that that is what's happening. But nonetheless, the mere fact that they would pander and expend energy and resources to do that pandering is indicative of a huge step forward in this overall story, certainly relative to a couple years ago. Furthering that evidence, we saw some interesting adoption nuggets. We saw the Wisconsin Pension Fund of all things, buying $160 million worth of Bitcoin ETF shares. You now have MetaPlanet, which is a Japanese company. You have Semler Scientific, both adopting Bitcoin treasury strategies, not unlike what MicroStrategy has done. You have Argentina apparently talking with El Salvador about their experience adopting Bitcoin. And so gradually, then suddenly, right, you had these early leaders of MicroStrategy, El Salvador, and then nothing. And everyone thought, well, maybe it's not going to be this big thing. Just give it some time, right? There is no world minus a literal productivity miracle that comes online ASAP. There is no version of the world in which Bitcoin is not incredibly valuable for an increasing number of people, for an increasing variety of use cases. So those adoption examples clearly further this story of Bitcoin as this absolutely incredible store of value, which is also topical because we heard Michael Saylor in a recent interview with Peter McCormick talk about Bitcoin as a medium of exchange being a distraction versus its store of value qualities. And this is a continuation of what he has said in the past. And a lot of people are up in arms on Bitcoin Twitter about this. And yes, some of that flack is certainly warranted. There has been other commentary from Saylor, and I would like to give him some benefit of the doubt. I think he's in this kind of tricky position. I'm not making excuses for the guy, but if you watch this particular video clip, which I think provides some really important context that people who are screaming online are missing, he makes it pretty clear that it's look, yeah, there's tons of problems. There's tons of problems in the world. What is the one thing that I can at least start with and focus on that can help spread the virality of this idea? Well, it's essentially Bitcoin as this kind of store of value. So I think for him, it's a starting point. I think it's a Trojan horse. Again, maybe I'm giving him too much credit. But regardless, it does beg the question of well, where is Bitcoin on its journey from what we have said is, it starts as a collectible, it then goes to store of value, then goes to medium of exchange, unit of account, all these functions of money. Where is it? And I think it has firmly solidified that store of value role. And I think we're in the very, very, very early days of the medium of exchange. And I do think Bitcoin is a medium of exchange. However, I think that payments experience, we know very little about what that MOE function of Bitcoin is going to look like, frankly. I do think the Lightning Network will play an integral role in being this value settlement layer that's going to interoperate across what might be many different payment interfaces for Bitcoin. You have things like eCash now. I did a whole video where I broke all of that down if you want to take a look at that. There's going to be things like ARC. There's going to be other things that we see. And so a lot of that story has very much yet to be written. And I think an important mental framework to keep in mind for all of that is around incentives. There's an excellent riff with Dhruv Bansal, Ryan Gentry, Alan Farrington, with Marty Bent on TFTC quite recently, where they're going through the Bitcoin stack, starting at even what they call layer 0, layer 1, layer 2. And they're talking about these little markets that form. And so that's the key, is to see how well solidified those markets are, how well solidified those incentives are. That's how you sort of know and can track where Bitcoin is in this journey. But in any case, tons of exciting stuff. Again, not all rainbows and unicorns, it never is. But what a fascinating time to be in the Bitcoin space. But I'm curious to hear your thoughts. What do you think of any of the topics we covered in today's video? Are there other topics you would like to see covered in future content? Let me know in the comments down below. But I hope you found this valuable and insightful. If you did, you already know what to do. Give this video a like. Use the share feature underneath this video. That really does help get this to a broader audience. And if you're so enamored with this content, you want to donate to a pleb, which really does help me continue to make these videos, you can do so in a number of ways. There's the YouTube Super Thanks feature built directly into YouTube. Or if you want to zip some sats my way on the Lightning Network, you can send to my Lightning address, me at www.ianmajor.xyz, or alternatively, ragermajor@getalby.com. And for those of you that want to get in touch with me, I'm now working with a range of clients one-on-one on all sorts of different topics, whether it's self-custody, running a node, verifying downloads cryptographically, always a tricky step, accepting Bitcoin payments, you name it. You can reach out to me at vita.io/IanMajor. But for now, we'll go ahead and leave things there. As a reminder, every sat counts. And until next time, my friends, I'll see you then.